Good morning and welcome to today's Five with Fitz. I'm Keith Fitz-Gerald and welcome to the chilly Pacific Northwest where things are getting a little frosty, so I'm dressing up. Anyway, the markets are apparently not done selling as the shutdown drags on. I say bring it on from an investing perspective, at least. We've been here before. We'll be here again. And it's important to understand that. This is how the game is played, folks. And believe it or not, it is a sign that the markets are working normally. I can't stress that enough. I also want to stress one of my favorite maxims today. The real money always gets made on days like today when the bears come out to play. It's just not always apparent until after they're sent packing. Now, it doesn't feel good. I get it. But that does not change the fact that the markets require buying and selling to work profitably and properly. Now, truth be told, and if I'm being honest, even I'm gritting my teeth a bit today. I've had enough of this nonsense. Still, take a deep breath like I am. The game is all about psychology right now. And that too is absolutely normal. Remember, strong balance sheets, real profits, and pricing power win every time over time, even when it feels like the sky's falling at moments in time. Oh, and one other thing while we're on the subject, particularly if you are feeling anxious, and by the way, you wouldn't be alone if you are. When the bulls and bears fight, it is the chickens who inevitably get slaughtered. So don't be a chicken. The fact that you're paying attention and you're feeling a little bit anxious is actually great. And what few people realize is it's also a huge advantage over time because it means you're thinking forward and paying attention, not cowering blindly in fear. And that, my friends, is almost always the sign of a successful investor, even though it may not feel that way right now at this very moment. Something else to think about. History shows very, very clearly that being invested in markets that stink beats waiting to invest in perfect markets. So get busy. Take a look at the chart that's in the written version of the Five with Fitz. Since 1871, the markets have had a very pronounced upward bias, and that's what you want to play to, even though it's down for the moment. Here's my playbook, speaking of which. Number one today, big one. Move over Nvidia. Uncle Elon is making his own Blackwell killer. Let me explain. Here's the deal with this. Tesla shareholders have overwhelmingly approved Uncle Elon's new $1 trillion pay plan, right? But that's not even the best part, though. What he said next on stage made my jaw drop. Quote, "We're developing our own next generation AI inference chip. Compared to Nvidia's Blackwell, it should use about 1/3 the power and cost less than 10% of what Blackwell costs." I mean, that is like throwing a gauntlet down before a duel. He also said that Tesla may do something meaningful with Intel, but he made it very, very clear that chips are the limiting factor. Now, my take on all this, I think Uncle Elon just mic dropped another $1 trillion business on stage in front of the media and the world. And predictably, I also think, as is almost always the case in situations like this, most people have completely missed what he said. Now, your job as an investor is exactly the same job as mine to be sure you don't miss it. Keith's investing tip: live for the sun that is coming up tomorrow rather than the one that set yesterday. It's a much more pleasant journey. Number two today, Ford's EV fantasy is out of juice. Pun absolutely intended. Ford's electric future just hit another speed bump. Reports have said that the company is considering pulling the plug on its all-electric F-150 Lightning, once hailed as, quote, the most important vehicle since the Model T. Well, what do you know? Makes my brain explode. It's hard to build the future when you're still lugging around the past, something I have said many, many, many times over. Ford's EV unit has been bleeding billions, and Lightning sales have fizzled. Fewer than 100,000 units since launch, if my math is right. Even record Q3 deliveries can't hide the fact that the math doesn't add up. There are only two players in the EV space able to profitably produce them at scale, and Ford, my friends, isn't one of them. So Keith's investing tip in this department: too many investors fall for this same trap. They get emotionally attached to the stocks they own. They overlook the warning signs and they make excuses. Then they wonder where their money went. So my point is, love your Ford if you want to. Just make sure you love your money more. Number 3 today, buy them. 2 of the world's biggest drug companies just blinked. Let me explain. U.S. President Donald Trump has just cut a deal with Eli Lilly and Novo Nordisk to slash prices on their blockbuster weight loss drugs, Wegovy and Zepbound, and the upcoming oral versions. Now, starter doses of the new pills will cost $149 a month. Injectables fall to $245 for Medicare and Medicaid, and even cash buyers will see caps around $350. Medicare copays, $50. So what you say? Well, this is big because that's a 50 to 75% price cut for most profitable drugs in America. And the sound you're hearing right now is Wall Street's spreadsheets catching fire. Now, the White House says, of course, that what's happening is about access and affordability. And I agree, but there's something else at work that's far more significant, potentially very, very profitable, which is why you want to pay attention. What's happening right now is that the world's biggest game of chicken is being played, and 2 of the biggest drug companies on the planet just blinked. Now, analysts, Wall Street analysts, figure the move could open the market to 15 million new users once the pills hit, but I suspect that's very low given the general health of America and Americans in particular these days. Now, Wall Street is already saying that this will hit margins, and they're right, it will. Short term. Longer term, this is far more likely to be a proverbial gold mine for smart investors, so pay attention and act accordingly. Keith's investing tip in this department: every gold rush turns into a price war eventually. Your job is to sort out who's left standing when the dust settles and invest accordingly. Now, my bet is on big pharma, not against it at this point. My faves have strong cash flow, fortress-like balance sheets, big pipelines, and impressive dividends that go a long way towards stabilizing current market turbulence. I hope that you've got something similar in your portfolio. Why? Because cold, hard cash is never a problem, at least to my way of thinking. OBAers, if you're an OBAer, stick to the plan. This is a great development and one I'm very happy to see. The only question is who's still standing when the dust settles. And yep, we've already got some great choices in the portfolio, in the model portfolio. Number 4 today, Airbnb's got a great quarter, but it's the same couch. Airbnb has popped roughly 5% after hours following a revenue beat and stronger than expected guidance. Okay, great. Revenue is $4.1 billion plus 10% versus 4.08 expected. EPS was $2.21 versus $2.34. Net income $1.37 billion, basically flat year over year. Bookings, I think, were 133 million nights and experiences plus 9%. Gross booking value up 14%. Adjusted EBITDA $2.1 billion, the highest in company history. Now, Q4 revenues guidance was 2.6 to 2.7, so in line. Now, Wall Street, of course, like those numbers, but I'm not impressed, right? The story's getting tired. Better maps, friendlier cancellation options, and AI to help hosts sound nice, but these are incremental refinements, not new engines for growth. Meanwhile, the structural headaches haven't gone anywhere. Tightening regulations in major cities. Hosts are being squeezed on fees and insurance. Travelers are pushing back against cleaning rules and service fee shock. Governments are circling in with tourist taxes and compliance demands. The easy money has been made, in my humble opinion. So Keith's investing tip in this department: every innovator eventually risks being commoditized. So it's important to understand the distinction between something that's an N+1 business, meaning a better mousetrap, and those that are 0 to 1 that are changing the world, because investing potential associated with 0 to 1s is orders of magnitude bigger. Now, hopefully, again, you've got this covered with your own portfolio. And meanwhile, I'll be here if you need me. And the idea of 0 to 1 choices is helpful, and I hope it is. And number 5 today, this was really kind of cool. Distance is now optional if this happens, and I hope it does. Qantas has announced that it's taking the long-haul flight to a whole new level with something it's calling Project Sunrise. Non-stop flights from Sydney to London and New York that will clock in at 22 hours. Seriously, 22 hours. I mean, I've taken some long flights in my time, 17 plus hours, but this is potentially a game changer. And not because it'll just suddenly cause a flurry of orders for new Airbus A350 1000 ULRs, ultra long ranges, that'll make the hop, but because it will force a rethink. That's how innovation really works. Technology keeps pushing what's possible, collapsing time and distance in ways that reshape entire industries long before the markets catch up. Now, it is easy to laugh or roll your eyes at the idea of spending nearly a full day in a metal tube with several hundred of your closest friends. Just remember this: profits are always found at the edge of absurdity. Personally, I'm more inclined to go hypersonic when that's available, particularly if I can get over the idea that Boeing is going to field the plane involved. Or use a Musk Hyperloop that could even be faster when those things get built. They probably will be. Still, 22 hours with no connections, makes me think. Dinner in Sydney, one? Dinner in Sydney, anyone? See me there? I'll see you there. Who knows? Could be really cool. Anyway, bottom line today, people don't fail in the markets because they're stupid, right? They fail because they can't focus when it counts. You know what to do. And you got this, I promise. As always, let's make it a fabulous day and let's get a strong finish to an otherwise blasé, nasty week. You got this, you got this, you got this. So do I. Invest with the best, ignore the rest. Anyway, cheers. I will see you on Monday. Thanks for watching.